Are you ready to take control of your wealth and design the life you envision for yourself and your family? Welcome to Wealth of Insight with Austyn Whittenburg from Whittenburg Wealth Partners. Austyn guides you through the entire planning process to help you build a plan that seeks to protect your financial future. He empowers you with creative investment opportunities and planning ideas to help you understand and achieve your long-term goals. It's time to gain confidence in your financial future. Now, on to the show.
Welcome back to the Wealth of Insight podcast. I'm your host, Austyn Whittenburg. Today, we're moving to a video format, so now everybody gets to look at my beautiful face while they listen to the podcast. So pretty exciting. Let me know what you think. Something new that we're trying here. And today, we're going to talk about everybody's most favorite topic in the world. One of the things you're supposed to talk to everybody about, and that's politics, right? But as it comes to investing, we really want to make sure we keep our politics out of our investing. If you go back historically, just a fun fact here, every single president going all the way back to Herbert Hoover, that was basically 100 years ago, has experienced a down market. And only a few presidents in that time, and some of them were red and some were blue, have actually been able to avoid a decline of 20% or more or a bear market, right? So that it hasn't mattered who you are, what color you are, down markets happen. And that's something we want to make sure our portfolios are ready for, and portfolios are designed in anticipation of that rather than in response to, right? So the market really is impartial. It hasn't cared. It doesn't care whether you're red or blue. It just wants to know what color it's going to be. That way it knows the changes it needs to make, right? So the market hates uncertainty more than anything. And historically speaking, if you look at an election year, the first 5 months of an election year typically are a little more volatile and have lower returns. But once we get through some of the primary election stuff and we get more into the heart of election season as that certainty, and then obviously post-election day, markets continue on that. They bounce back and they continue on that upward trend similar to any other year. So it's once that uncertainty is lifted, like I said, that's when the market really starts to move back in its positive direction. The biggest reason why we want to keep politics out of our investing is because it's just so unpredictable. And I think we're seeing that even more and more now. You don't know who's going to be elected. We don't know what Congress is going to look like. We don't know what policies they're actually going to be able to pass, if any. More and more it seems like there really isn't things happening as much as maybe we the people would like to see. So, because of that unpredictability, it's just really hard to know exactly what's going to take place. We also want to try to avoid emotional investing, and people maybe are the most emotional about politics over anything else. Historically speaking, elections have had very little impact on long-term investors. Election years, I should say. So in an election year, the results of this year, red or blue or green or whatever other color it may be, historically has had little impact on how the market responds. So the markets have been positive in 20 out of 24 of the last election years, averaging about 12% per year. So it's been it's not a super great year in any given year, and that partially is due to that, like I mentioned, that 5 months of sort of increased volatility and lower returns because of the uncertainty leading up to it. But a 12% year, I don't think anybody's going to be sad if the markets head in that direction. Now, I guess it goes without saying, or I should say, these historical numbers are no predictor or no guarantee of what may happen this year, but this is just what we've seen historically. And the markets have performed well, again, whether it's a Republican or a Democrat that wins the election. So if you were to take a look at the 10-year returns of money that you invested in an election year, the years where a Democrat won or a Republican won, both are positive years. It's actually, and this may surprise some people, but if you look at those 10-year returns with Democrats winning, your money would have grown about 11.2%. If you look at the 10-year cycle of a Republican winning, your money is compounded about 10.5% per year over that time period. So very little difference in those 10-year returns. And again, that's just us wanting to keep this long-term focus, right? And if we're long-term investors, which we hope we all are. That's what we're out here talking about, preaching, helping our clients become long-term investors and not reacting to all these little things. Then, we know that these 10-year numbers, again, it hasn't mattered one way or the other, red or blue. So if you look, we back to that long-term investing and where we think the market's going, we still believe that diversification is an appropriate strategy. There's going to be some businesses and some sectors that do better under certain presidents or others, or different rules or different laws and things that Congress passes, but there's really no way for us to know which way that's going to lead. We think that being, that diversification for long-term investors still makes a lot of sense. Again, diversification, as we've mentioned before, no guarantee of positive returns, but it does help. It has helped historically lower the volatility of the portfolio and try to help smooth out the ride a little. And this is maybe a real long-term perspective here, something that maybe a little hard to grasp. But if you were to have invested $1,000 in the S&P 500 in 1933, so just coming out of the Great Depression, right, sort of on the rebound there, that $1,000 then in 2023 would be over $19 million. You would have had various presidents of all, shapes and sizes and red or blue over that time period, but we've still continued to see strong market growth over time. That really helps me keep that long-term perspective, knowing that, hey, there may be some little bumps along the way here, but if we're long-term investors, we want to just don't make those emotional decisions based on politics. I have seen some charts where you look at, hey, if you only stay invested during years that a Democrat's a president, or only stay invested in years that a Republican's president, and you're in cash the other years, you've really trailed significantly, behind what the market has done over that time period. So while there may be other sort of non-financial factors that people are interested in the election for, we still feel like, hey, we're not going to be making any investment decisions here based on what we think the presidential election will do. As I mentioned earlier, we're building portfolios in advance of volatility, in advance of these changes, rather than in response to. So if we're always in that response mode, that's when the emotions creep in and we make bad choices. So that's really our role in all of this, through these turbulent times, through election years, through all the economic noise that's out there. Our role is to help clients make the best decision for them and their situation. If you have any questions, you can certainly reach out to us at our website, wittenbergwealth.com, or you can text me at 801-839-7056. As always, remember to share with your friends and family and subscribe to the Wealth of Insight podcast.
Thank you for listening to the Wealth of Insight podcast. Click the subscribe button below to be notified when new episodes become available. Securities offered through LPL Financial, member FINRA SIPC. Investment advice offered through Stratos Wealth Partners, a registered investment advisor. Stratos Wealth Partners and Whittenburg Wealth Partners are separate entities from LPL Financial. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of Whittenburg Wealth Partners. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning.